It said we were 30K fair value back when we pumped all the way to 69. Look, we always go above fair value in crypto fall. At the opening, you were talking about the seasons. And look, I didn't make this up. I've observed it. I focus on it, but it's not my thing. But the idea that somehow the 4-year cycle is going to go away just doesn't make any sense to me. It's hard coded into Bitcoin's program, and that's the halving. And so what happens is the halving occurs, and if the price didn't move, what would happen? Most of the miners would go out of business. Think about it. Their electricity costs are fixed. Their machine costs are fixed. And so if suddenly the block rewards get cut in half, if the price doesn't adjust, some of them have to go out of business.
Mark Yusko, a seasoned investor and CEO of Morgan Creek Capital Management, has been a vocal advocate for Bitcoin, often sharing insights on its value and potential. His recent conversation with Scott Melker revealed several intriguing points about Bitcoin's trajectory and the cryptocurrency market in general. Yusko highlighted Bitcoin's growth from zero to a staggering $850 billion market cap in just 15 years, emphasizing the importance of understanding the asset's cyclical nature. He noted that Bitcoin's value tends to follow a 4-year cycle, largely influenced by its halving events. These cycles are characterized by periods of rapid growth, followed by significant corrections. One key aspect Yusko discussed is the concept of fair value in Bitcoin's pricing. He believes that Bitcoin's fair value is currently in the low $50,000 range, a prediction supported by models like Metcalfe's law, which relates the value of a network to the number of its users. According to Yusko, as Bitcoin approaches this fair value, it attracts not just investors but also traders, speculators, and eventually gamblers, leading to a parabolic rise in price. Let us now get into the video and listen as Mark Yusko shares his insight. Don't forget to like, subscribe, and drop your comments below.
So what we have seen in each of the previous cycles is the price doubles. That makes sense. That doubling is a fair value doubling. But what happens is if something goes up a lot quickly, what happens? People get stupid. They start to tumble in. And the way to think about it is after the collapse, right? We all know the crypto winters. So winter is when we have the collapse. And what is a collapse? A collapse is where we fall from craziness, euphoria, back to fair value, but we don't stop at fair value. This is the way bear markets work in any asset. We go right through fair value and we go to washed out levels where no one will ever buy commodities again. No one will ever buy NVIDIA again. No one will ever buy Bitcoin again. Yeah, whatever. And I actually remember being on TV December 2018. We were at 3,200. And the host on CNBC says, don't you think it's going away? Like, no. In fact, we just issued the Morgan Creek Digital Bitcoin Challenge, and we challenged anyone to take the other side. $1 million charity bet like the hedge fund bet with Buffett. I actually even called Warren. He picked up the phone and we talked, and he decided not to do it. But we actually had a dialogue back and forth for about a week. Wow. But we couldn't get anybody to take the other side. They took the S&P. We take Bitcoin for the next decade. We got one guy who said he would take it, and his son talked him out of it. But because he was in the asset management business, the son was like, look, there's no upside for us. If we lose, it's bad. If we win, who cares? We're supposed to win. So no one would take it. Now, it's a good thing they didn't, because Bitcoin has crushed the S&P over the last 5 years. I mean, it's not close. But the point is, in crypto, when we go down to this crazy level, and fair value at that time was around $11,000. So at $3,000, really easy to say, you should buy this. And what investors do, they buy things below fair value. Investing, capital I investing, is about buying things below fair value. Okay, that's the idea. But then you start to increase. So then we get out of crypto winter and we go to crypto spring. Now, crypto spring is not boing, V-shaped bottom, everything's going back. Spring is wet, nasty, and windy and cold, and it's kind of like just you're bouncing along the bottom, a little bit of, but that's when you accumulate well below fair value. Then we get to crypto summer. Now we're in crypto summer right now. We started crypto summer in June. We'll be in crypto summer till right after the halving next June. And what is crypto summer? Well, crypto summer is where we slowly accrete back to fair value. And what have we done, right? We got washed out, right? We had crypto spring, and then we got a nor'easter, right? We got Hurricane Sam, idiot comes in and washes us down from 25 all the way down to 15.6. And remember, people were like, it's over. It's over. Told you it was a scam. What's interesting is crypto summer, we accrete back to fair value. And from that bottom, from that washed out Hurricane Sam bottom, what have we done? Higher highs and higher lows. It's the most beautiful accumulation pattern you have ever seen. And that is investors buying below fair value. Now, when we get to fair value at 50, what's going to happen? The halving is going to occur. Well, then what happens? Well, we add a zero. So if you go back to the first halving, we went from 10 to 100. Then we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we're going to go from 10,000 to 100,000. That's a 10x growth of the network. Again, following this Metcalfe's law curve, that is a beautiful, beautiful accumulation pattern. I mean, it's just absolutely stunning. And when this occurs, and it's also an amazing cup and handle pattern, if you look at it over a little longer scale, I mean, beautiful. And all of this says that the investors are buying. But as we approach fair value, what happens? The traders come in. And we've seen that a little bit now. The traders are coming. Traders aren't bad. Traders just don't give a crap about what they're buying. They just want movement, and they'll buy, they'll sell, they'll trade. I'm not very good at it. I don't really do it. I'm a boring value guy. I like to buy things below fair value and hold them. That's easy. I'm not a very good trader. But then what happens as you start to get above fair value, as we enter into crypto fall next June, then we'll start to get above fair value. Now we'll go from that 50 to 100. And that 50 to 100, it's probably going to happen really fast. Why do I say that? Two reasons. One, that's what history tells us, that FOMO kicks in. But this time we got a massive tailwind. Last time we had GBTC. About $10 billion came into GBTC. We went from 10 to 60 really fast. Then Elon, put out the famous quote, went from 60 to 30 in a heartbeat. And then we went back to 69 because Michael Saylor bailed us out. Well, this time, if fair value is at 50 and we're going to 100, that 50 to 100 candle, I think it's going to be fast. In fact, I even wore my green pants today for the green candle.
Looking ahead, Yusko anticipates significant growth for Bitcoin, predicting that it could reach around $100,000 to $150,000 in the next cycle. This expectation is bolstered by the potential approval of a Bitcoin ETF, which could introduce a substantial influx of institutional money into the cryptocurrency. He also touched upon the broader implications of blockchain technology and the innovations it could bring in the coming decades. Bitcoin's price has recently experienced volatility, briefly plunging below $41,000 and causing a stir in the crypto markets. This drop led to $500 million in liquidations and a notable selling of around 40,000 Bitcoin, worth over $1.6 billion last week. Yusko's perspective suggests that such fluctuations are part of Bitcoin's larger cycle and may even present opportunities for accumulation and long-term growth.
With the spot, everyone's like, everyone's going to front run it. No. When I buy the ETF in my UBS Family Harmony account, right? I have this Family Harmony account with my brother-in-law at UBS. I'm not allowed to buy anything the day the ETF is approved. I can transfer money into it. That's real money that then they have to do they have to create a new share. They have to buy spot Bitcoin. Now, here's the problem. Three-quarters of the coins haven't sold in a year. They haven't traded. We have $8 billion of trading volume every single day. It's the same Bitcoin over and over and over, like a tumbler. A washing machine, not a tumbler like a hider. But the key is that the price is going to rise because the demand is going to exceed supply. That's simple Econ 101. It could be a big move because 10 billion from GBTC plus Saylor, singing his praises, moved us from 10 to 60 in about 10 weeks. Now we had the end of crypto fall, the Thanksgiving pump, all that good stuff. Okay, great. But this is different. This is real demand that I think could stretch. Look, I think it's going to be 300 billion before all is said and done. That's 1% of the assets held in UBS, Merrill Lynch, all these places that aren't allowed, right? It's crazy. Like if you're Merrill Lynch, not only can you not buy GBTC, they won't even take you as a client if you made your money in crypto. We went from zero.
Take your time.
15 years ago. 15 years ago, we had 15th birthday here in January, kind of week before the approval. And 15 years from zero to $850 billion of value. How did it do that? Not in a straight line. Up, down, up. But every high is higher and every low is lower. And every low is higher. And that is an accumulation. There are now hundreds of millions of people. Eventually, there will be billions of people that use this asset. And what's really fun, and I'll leave you with this thought, right? I've been talking about this forever. The cycle of 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, 2024 is the truth net. It hadn't even started. The cycle that we're all going to be excited about, and it's going to go for 14 years, hasn't even started. The tech evolves and then gets ready to blast off. And from 2024 to 2028 is going to be like 96 to 00. Now, then there's a bust, and then we'll have the pets.com moment, and everybody will give up. And, someone, maybe Mark Andreessen or maybe this Mark, will say, all those ideas were right. I'm just quoting Mark Andreessen from 2001. All those ideas were right. Pets.com, Webvan, they're just early.
Right.
And guess what?
I think that's what
we have Chewy, and it took 20 years, but that's okay. We got a long time, and this is going to be here for a long, long time. And the other person who has their birthday on the 8th, along with Elvis, is my son. So my son turns 13, and his present will be the Bitcoin ETF.
Cathie Wood's ARK Invest sold around $12.85 million worth of Grayscale Bitcoin Trust, GBTC, shares from its next-generation internet, ARKW Exchange-Traded Fund, ETF, on Monday, the biggest sale in more than a year. The offload of 395,945 GBTC shares from ARKW leaves the fund with about $112.7 million worth of GBTC, a weighting of 6.95%. ARK aims for no individual holding in its ETFs to exceed a 10% weighting of the fund's total market value. Digital asset manager Grayscale's Bitcoin investment vehicle dropped 8.6% to $32.46 on Monday, reflecting the 5.8% decline in the value of the largest cryptocurrency by market value. Grayscale is hoping to convert the Bitcoin Trust into a spot Bitcoin ETF in January. The U.S. Securities and Exchange Commission is set to decide on its application, along with those of 13 other firms, early in the new year. ARK Invest also sold $1.88 million Coinbase shares on Monday. That follows the sale of more than $100 million of the stock last week. Binance, Binance.us, and Changpeng Zhao argued that the U.S. Securities and Exchange Commission, SEC, did not meet the requirements of the Howey test in its suit against the two companies and their founder in a new filing Tuesday. Binance and Zhao, more commonly known as CZ, filed a reply to the SEC alongside Binance.us, which submitted its own separate but similar filing, arguing that the SEC did not show that the exchange's U.S. customers had any contracts that would meet the definition of an investment contract, or that other elements of the Supreme Court case were met. It's the latest bid to dismiss the lawsuit filed by the federal regulator in June, when the SEC alleged that Binance and Binance.us allowed the general public to buy and trade unregistered securities by listing certain cryptocurrencies and offering a staking service. In Tuesday's filings, which are responding to the SEC's reply to the motion to dismiss, both Binance and Binance.us argued that the regulator hadn't shown there were any obligations to the exchange's users after they purchased certain cryptocurrencies, suggesting there was no investment contract as needed by the Howey test. What do you think of the latest filing by Binance? Do you think it would have any effect on the ongoing case with CZ? Let us know your thoughts in the comment section below. Also, don't forget to like, subscribe, and turn on notifications. Thanks for watching. Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.